Hi guys, welcome to today's class. Today we are going to see role of RBI under general economics category. Alright. Now, first we will understand what is RBI. We all know it is a Reserve Bank of India and it is a central bank and a regulatory body. Alright, it is under the control of Finance, Ministry of Finance, the Government of India. And we know that RBI is responsible for what? Indian rupees and the regulation of the banking system. It is a apex bank in our country, all right? So it controls all the other banks and banking companies, NBFCs in India. All right, so it commenced its operation on when? On April 1935, and it was established by passing an act called RBI Act 1934. It commenced its operation in 1935, and it was nationalized in the year 1st January 1949. All right, now this is a brief introduction of RBI. Now, straight away, we'll talk about the role or functions of RBI. So, what RBI does, or what are the functions, or what are the roles of how it contributes to the economy or country, we will see now. All right. Now, first one, it is bankers bank. What is meant by bankers bank? Guys, understand all other commercial banks, all other banks in India who are operating in India, if they need, the lender of last resort for them is RBI. Whatever they need, all right, if at all they need, the RBI serves as a clearing agent for them, all right, and giving guidance to them, all right. If that those banks need funds, if those banks need any, funds in for a short term, or where they couldn't arrange anywhere, they can go and ask whom? RBI. All right, so it is always called as bankers bank. So it is a lender of last resort to them. So these commercial banks, these other commercial banks or scheduled banks, all right, whom we call, like for example, SBI, or PNB, whoever it is, all right. For them, RBI acts as a banker. If we want money, where will we go? We'll go to bank. When we want loan or something, we'll go to bank and we will take. The same way, the other banks, there are so many instruments for that, guys. Repo, reverse repo, and adjustment facilities, liquidity adjustment facilities. So many ways where these commercial banks can borrow funds from RBI for their operations, for their requirements, statutory requirements, and so many things. All right, so it serves as a banker's bank. Next one, development function. Yes, RBI does many things which related to which related to the development of an economy and development of the banking system. All right, we can take it in two ways, guys. One is development of banking system. Yes, earlier, if you see, we don't have online payments, or there is no instant money transfer. So many things are not there now. If you want to transfer funds also, you have to go to a bank. If you want to withdraw even 100 rupees also, you have to go to bank. But what happens, slowly they have introduced technology and they started digital, everything going digital. Then again, it is a development. They made a very huge because for faster business purposes, for faster processing, all right, immediately, instantly you are getting your statements, instantly you are getting your information, whatever you wanted. All right, so this is regarding the banking. And every nook and corner you need to have ATMs, or every nook and corner, every villages should be served by the banking system in India. All right, so they are trying to open as many banks possible wherever, each corner of India, right? All the villages, their aim is to open at least all the 95% of the villages should be served by what? Banking system. All right, so these are all the development process. So many things they are bringing in, and they are setting in credit rationing. All right, again, for how it will help in development. Understand, for agriculture you should give this much. Again, it is for the development. Agricultural loan should be this much. For educational purposes you should give this much. For women's self-help group you have to give this much. And for in this type of industry you have to give this much. They will give guidance to the commercial banks how to advance their loans, how to give their loans. All right, categorize, credit rationing. Again, that is towards what? Development. All right, so because development of what can you say? Development of these areas, or development of these various sectors. Again, RBI looking at various sectors. Right. So based on that sectoral development, RBI will say, fine, in your bank you have to give so much, but 10% of your loan should be towards women's self-help groups, and 20% should be for educational purposes, and 30% should be for housing purposes. So they'll ration it. They'll credit. They'll ration it. Right. Why they are doing it? For development. All right. So one side they are developing the banking system. They are trying to reach as much as possible all the villages, all the rural areas where the banking has to be there. Every people should have access to their banks, where everything should be first. It should come to, because they are capitalizing it. Correct. But nothing but when we are opening banks, people started using bank, means we are forming what? Capital over there. We are taking money from the people, and we are just that money supply will get what? Improved. So that is related to what? Development functions. All right. Next one, issuer of currency. Yes, they are the sole authority. All right. Sole authority for issue of currency. RBI is responsible for whatever now new notes, whatever the new notes we are having, currency notes I'm talking about, 500 rupees, 200 rupees, everything will be issued by whom? Except 1 rupee note, and everything will be issued by RBI. They are the sole authority or sovereign, we can say. They are the sovereign over the currency issue, right? Because they are maintaining the value of the currency, so they are responsible for maintaining what? Value of the currency too. It is a main function of an RBI to maintain the current value of the currency. That is the reason they'll follow various measures to control inflation and to make sure that the value of the currency is stable. Not only value of currency locally, but also even the rupee value outside the India, outside country also, they should manage. All right. So they are the sole authority, or they are the sole sovereign for the issue of currency in India. Next one, regulator of payment and settlement. I already told you they are the clearing house. They serve as a clearing house, and yes, they look after how the payments, how the these transfers are getting done. All right, they, because settlement is very important. If I transfer from one bank to another bank, so if my bank will debit my money and the other bank should receive it, correct? So that settlement should happen. So that settlement, who is taking care of? RBI is taking care of. They have the payment gateways, they have technology behind, and how that IMPS, RTGS, so many things are there. Real time processing, and NEFT, NEFT, NEFT we have. So many things. RBI has brought in so many things in place. They are regulating it. Right? They are regulating. Everything is coming under. Now we are doing phone pay, we are doing GPay, we are doing, so many other UPIs. Correct. So everything, who's taking care of it? RBI. They have laid down so many rules. They have laid down so many regulations. All right, how it has to be. What are the safety measures? What are the protocols they have to follow for the settlement process? All right. So I mean, that is another main function of whom? RBI. See, these banks will collect money, these banks will mobilize deposits, and these commercial banks will lend and everything. But the infrastructure, who will provide? RBI. RBI will give guidelines how that infrastructure should be. In the back end, how the work has to be done. All right. So the RBI will look after how the settlements and how that payment should happen, how that clearing should happen, and when it has to happen. What is the cutoff time? If it is after 6 o'clock in the evening, if it is after 8 o'clock in the evening, then it should not go beyond this much amount. It should not go per day. This is the limit. Why? Who is setting all those limits? RBI will set, because they wanted how it has to be, funds has to be flowing. So everything will be settled by whom? RBI. Next one, monetary authority. Here, monetary authority, what we are talking about here is, in our previous earlier lectures, we have studied about monetary policy. Monetary policy and fiscal policy would have studied. In that monetary policy, I have already told you, it is taken care of by whom? Reserve Bank of India. They are doing wonderful, actions, wonderful things over there to control what? Inflation, to bring out price stability, to maintain the rupee value. If you would have seen our earlier videos, you would have come to know how they are managing it, right? So they are the monetary policies under their control. All right. So now they have established MPC also, correct? Monetary Policy Committee. In 2016, they established. After that, the RBI role has somewhat it has come down, but still they also again the MPC is also what they work closely with whom? RBI. All right. So they are the monetary authority here, monitor for monetary policy and monetary control, supply, monetary supply that is controlled by whom? RBI. RBI will take care of how much money to be supplied in the economy, how it has to be, and what are the currency notes, how many notes, everything will be decided by whom? RBI. So the monetary supply and the monetary policy will be controlled by RBI. Regulator of financial system, again it goes with your monetary supply, again it goes with your monetary policy. And the financial system, if we talk about the entire banking system, you can call the entire banking system in India is under the control of whom? RBI. All right, how many banks, how many branches you can have, how much net worth you should have. All right, how you have to, not only banks, guys, even there are certain companies called non-banking financial companies, NBFCs. All right, even those will come under the purview of RBI. So now I'll tell you one thing, it is not only we are talking only about banks, we are RBI take care of only banks, and no. Suppose you are a company whom the in money is coming outside India. Again, RBI will come into picture. You have to comply with the procedures of RBI. All right. So RBI take care of entire money supply, entire financial system. All right. They are the regulators of your Indian financial system. All right. So how many banks should be there, where it has to be, and how much funds have come in, and whether foreign funds have come in or money has gone out of it. Funds have gone out of India, where it has been invested, who has done it, how it has to be maintained. Everything RBI will have a control. All right, because it is a apex bank in our country, it is a central bank of our country. It has the sole authority over all those things. All right, and if you see here, whomever wants to start now I mean banking activity, say for example chit funds, or this Muthoot Finance and all is there, these are all non-banking financial companies. All these are also under the control of whom, under the supervision of whom? RBI. These are all parts of your financial system or not, but still they are coming under whom? RBI. So RBI serves as a regulator of what? Indian financial system. All right. And next one, if you see banker to the government, yes, RBI serves as a banker of whom? Government. Government can borrow from whom? RBI. Not only borrow, RBI does many activities on behalf of the government. All right, they sell securities on behalf of the government to raise funds. All right, they purchase securities on behalf of the government to control the money supply. All right, and they lend money to the government. They act as an advisor to the government. All right, regarding the various economic issues. All right, so RBI is not only just a controlling body or it is just an administrative body. No, they serve as a banker to whom? Government. Government at any time, if they want to borrow, they'll borrow treasury bills. All right, they will also raise funds on behalf of whom? Government. RBI will raise funds. They will sell the government bonds, government treasury bills in the market, and they'll raise funds for the government and they'll give it to the government. All right, so it serves as a banker to the government also. And managing foreign exchange, guys, this is an again important, because to maintain the rupee value outside India. All right, now you are saying no, $1 is equal to 70, 75, all those things. How it is changing, or how we are managing it, because RBI is taking control of that. They are trying to control, or they are trying to make sure that rupee value is not deteriorating to a greater extent. All right, and moreover, foreign exchange, when we talk about the payments coming in and coming out of India, coming in and coming are going out of India, we can say. So whenever we have foreign money coming in, then maybe it may be because of imports, sorry, it may be because of exports. When we do exports, money will come in. All right, so we will earn foreign exchange. When we are doing imports, we will pay. So we will pay foreign exchange. So again, RBI is the custodian of foreign exchange, we can say. RBI is who? Custodian of foreign exchange, and they manage it. They manage it. What should be the buying rate based on the rates prevailable? They will, okay, this is the buying rate. We have to maintain this at this buying rate, selling rate. All right. And this is the rupee value here. This much amount, this much, funds have come in. This much funds are going out. All right. Every day, every day they will watch out, because that is very important to maintain the rupee value over there. All right. And moreover, we have to maintain, in our previous classes we have studied balance of payments, balance of, so many things. All those things are coming under which one? Managing what? Foreign exchange. Correct. So RBI is the custodian of foreign exchange in India. All right. And the last one is deduction of fake currency. Yes, that is also again a part of RBI. We can say fake currency means counterfeit notes. I mean, 2016 also it happened. We had demonetization. All right, because one of the main reason for that demonetization, they said is like because of the fake currency, too much of fake currency, we want to clean it up. Correct. So the fake currency or counterfeit notes, again that is another role of RBI. Every time and then they will check out for this counterfeit notes, and they'll check out for this fake notes, and they try to remove those fake notes from the supply. Supply in the means what? It is in the flow. It is in the it is in the flow of the economy. So they want to remove it, because if we have too much of counterfeit notes or fake notes, what will happen? Money supply will be more, and because of that, value of money will come down. Value of money will come down. So inflation will increase. All right. So again, it is a part of your monetary policy, we can say, deduction of fake currency. So these are all the main functions or role, we can say, role of RBI in our country. And when we talk about this monetary policy, we have already covered this in our earlier videos. So I request you to go and have a wider, or you can have a better picture how RBI does this monetary policy to control, how it contributes to our economic development. You can refer to our earlier videos, which is named fiscal and monetary policy. There we have elaborated separately how this monetary policies are framed and how the RBI is doing it, and everything we have explained over there. So I request you to watch that video also to get a better picture of the role of RBI in Indian economy. All right. I hope you understood this, guys. I wish you all the best. Stay tuned for Olive Boards for more.